Good morning, traders. This is going to be a very quick update about what's been going on in the market this morning because this is getting more and more intriguing. So when we met Wednesday, we were noticing and talking about the fact that we still had a damaged monthly MACD, strength in the moving averages, flagging sideways as we would expect. We had this weekly with the powerhouse push up underneath, and we had a candle that had gapped a bit. And then over here on the daily, this is what we were talking about. We had this little candle sitting up here in the middle of nowhere. We framed it out and said, let's be careful here, have something in mind to short if this comes to fruition, and be careful that it might, turn out to be a bear trap. MACD is still undecided here. It's arched under a little bit, still could go either direction. But what I want you to see is, in fact, this morning off the open, this was a bear trap. And I thought this would give us a perfect opportunity to take a look. This has been working all year long. Let's take a look and demystify this. This is where we were on Wednesday. Here's Thursday. And now you can see that we're still at a massive gap up, and it looked like it was going to come back down, test C8. So I'm going to switch now. We don't need these higher time frames. We know what they are. It's mixed on the monthly, it's strong on the weekly, strong on the daily, with a potential to possibly retrace a bit on the daily. So as we come up, let's get the hourly here. And I just couldn't believe we were going to get this morning. This is I'm going to take this off because that gives away the secret here of how you can protect yourself. And that's what we're going to talk about. So here was our line in the sand. This was drawn on the daily chart from this high little flag here. So these lines are all the same. Basically, they'll be close. When I put this in over here, you're going to see the consistency. So we were judging whether or not we're going to, stay high here based on, first of all, our MACD, and it's still high and tight, but it is blue line below red line, and it is in a position that could arch under, it could flip back up. So this is what we're watching right in here. We did pull back to the 8 at the open this morning, which we talked about, and was it or was it not a bear trap, sorry. The shorts getting trapped short, and the answer is yes, it was in the short term. So let's see what that looks like. Alrighty, so again, here would be our same pink lines, just about the same place on both sets of charts, just about the same. Nothing perfect, it doesn't have to be perfect. Had a little pull down, drop down in here, and then it rolled down. So here is the down in the gap, but I want you to see where this candle opened. Now this is the secret right here. This is where the candle opened. It flushed down, bringing everybody pouring in short. Everybody thinking, okay, we are going to fall, let's catch the train. Well, you don't want to chase price down like this, just without thinking this through. The hourly MACD said, yep. But over here, here's your gap. Let's frame it out really clearly. So here's your candle. That was your gap down. Here's your open, and then the flush. 5-minute flush, 15-minute flush. And then what did it do? Lo and behold, it flew all the way back up to much higher than the open, right back to yesterday's close. That's called a gap fill plus. It went a gap fill plus. Now, when I talk about these and I say just be careful that it's not a trap, how can you protect yourself in this? This is crazy behavior. It's insane. Yellen speaks. We come from a gap down. We pop up like there's no tomorrow. And then on virtually good news this morning and all night, we rolled down, getting everybody excited about the shorts, getting the bears all ready. Now you have to be ready. You understand that it's good to be ready. You should always have one thing on your plate that you're ready to go short on. You got to be ready. Always have that one thing. I like to pick on the IWM right now. IWM or maybe the SPY, however. But here's the reality test. Are you ready? So now we're going to change these over. This will become the hourly. This will become the 15. And then I'm going to bring the 5 up over here with the overnight. There are two ways that you can protect yourself. Let's frame this all out so you're seeing just the close-up. So here is the gap down this morning. There's your MACD saying, oh yeah, we could go short here. We could. But what I want you to see is as this opened, this is what the 5-minute looked like. Do you see this gap? Down, down, down. But do you see the resistance on these candles? They all have tails. It means that it's pushing back up. Flush down, push back up. Flush down, push back up. Flush down, push back up. Now watch what happens when we do the reveal of the overnight. This is why, particularly on Thursday, Friday mornings, if you're trying to trade fast off the open, you need a directional bias. You need help. Here we are coming down into the open. Look at your MACD. Your MACD is saying, don't fall for it, don't fall for it, don't fall for it. At first, it looked like, sure, it could go down with these first few candles. Let's frame it really tightly. So here it was, here it was, here it was. But you notice this big bulge? What do we talk about with that big bulge? We're way, 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 way off the 8 when we get these big holes. And yes, you can form a butterfly, the lower low. You can actually pick up some momentum. But what is your MACD saying? Your MACD is saying, I have to recover from this. And you've got all this pushing back up, pushing back up. So now let's go down to a 3-minute. Friday morning, there's nothing wrong with looking at this. Nothing wrong with going down to a 3-minute. And actually at the 3-minute, from prior to the low to this butterfly, there's your butterfly. From prior low, there's your divergence on the MACD. This is the quintessential trap in the morning. They're hoping you don't look at the market with this much detail. And they're really hoping you don't use the MACD this way. Because the MACD is telling you, wait a minute, wait a minute, wait a minute, wait a minute. Whoa, 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 whoa. Off the 8, back to the 8, rolling down, but the MACD is holding. Do you see how subtle it is? So you can be ready, if you're real aggressive on a Friday morning, to look for a pitchfork to the high side, because this is immediately what your MACD did. Perfect example of a bear trap. You flip this chart upside down, and it's a bull trap. It's suckering the bulls in at the highest high, breaking out. This is why the breakup trade doesn't, or the breakout trade to the downside, breakout trade to the upside doesn't always work. Very often, if you get caught in this, it's because you need more information. And this is how you reveal it. I hope this really helps this morning. The other tool I recommend highly, I can't even begin to tell you, is the ShadowQuad. And why? Because we opened at support, folks. We opened right here at this line. We opened, this is the candle, the opening candle, the one that's got the yellow box drawn around it, shaded. That's it. We're opening into support. And we hit immediately 1,000 tick to the downside. What happens with the market? It normally, unless this is really going to fall and fall fast, it normally, and you're watching this, it normally will bounce away from those extensions. Away. So we open down here, it pushes away. We touch up here, it pushes away. And all the time, you're opening right here at support. Don't fall for it, folks. It's a teaser. They're trying to get everybody who buys the breakout in. That's why when I hear people talk about the breakout trade being so successful, well, it is. It is. If the market is going to support the breakout move. That wasn't the case here today. And we could see it coming into the open because there is your MACD. If you're really I mean, I don't want you to go down to a 1 minute chart. You don't need to do that. The 5 was suggesting, the 3 was definite, and the 1 minute was saying, are you nuts? Are you absolutely nuts that you're going to go against me? This is why I like people to do the 1 minute drills when they're first looking at this trading methodology in paper, because what you start to read is this 1 minute chart. And while it's not enough to turn the tide, it's enough to hold price. You might get a little residual momentum, but as long as that MACD turns and holds, you're not going anywhere. It was very visible on the 3 minute. You never had to drop down. That was very visible here. Higher MACD. And not only that, but let's say the MACD had come back down to flat. It was still an upward divergence on the MACD that you wait for the flag to play out. You wait for this flagging action. And this is why when I first saw this methodology, I was so attracted to it, because most of us lose our money chasing price, over trading, chasing price, thinking, oh yeah, this is the big one. Sue said get ready. Well, yeah, I said get one thing in mind that you can short, but watch for a bear trap. And this is it. And I don't know that I've ever had an opportunity to actually expose this cleanly, where you can see what we're doing right here at the open. We're opening right into support. They're going to tease you. You hit this 1,000 tick minus for 2 candles in a row. The likelihood is, unless you get massive market support, you're going to bounce away. You're going to pull away. This is like a hot stove on your fingers. Let's call this one icy cold. You've fallen too far. Your fingers are freezing. And this one, you've gone too high. It's scalding hot. So if you made this line blue, icy cold, and this one red hot, that's what it's like with your fingers. Ouch! Pull away. Ouch! Now, does that work all the time? Not in a trending market. But in a morning open like this, where we've trended down, they caught everybody in the overnight action. They caught everybody to the short side. And then they just rip it back into their face. Perfect bear trap. This is what's been frustrating people like Sosnoff and Tim Knight for 7 years. Now, when it works in their favor, they make up for it because they have huge positions out there and they're hedged. But this is the perfect example of what's been happening to potential shorts all year. Alrighty? I hope this really helps, and I hope that when I caution about being careful in the mornings, being careful, that, be ready to, short the market, but don't overextend yourself. And the beauty of these bear traps, once you start to understand this pattern, is let's say you were short from yesterday. Let's say you did short the market at this 15-minute setup following a double top with this divergence on the MACD. You did a swing short and you held overnight. It's because in the morning you had time to close your position profitably. Not a lot of time. But as you saw this MACD setting up, you're green from your overnight trade. You can get out of this trade. If you have a small account, you're not losing a day trade. Now, yes, this can go against you, but that MACD is pretty committed to the fact that we're not going to go anywhere. At least it's not going to let you think you're going too far. So you lock in your profits. So you win-win using the MACD2 line. Does it work 100% of the time? Nothing does. It's trading. There is risk. But the more you study this, the more you will start to realize that it gives you a really solid advantage. And even if you didn't close out until you got across the 8 and the 21 on a lower time frame, you still made a really nice profit on a swing short. And here's how the Shadow Traders Quad finished the day. I want you to see we went all the way up to the gray box, top, down, all the way back through it, up to resistance 1. Ladies and gentlemen, I give you an immense bear trap. But hopefully you're all using this. Hopefully you've all added this to your toolbox. Have a great weekend.